Welcome back to the garage. It's Monday, February 9th, and it feels like somebody handed the market a steering wheel with no car attached and said, good luck. I'm Avatar John, and I don't care if you like what I'm about to say, because the charts don't care either. Before we ride, smash the like, hit the follow. Share this with your fellow Deegans, even that buddy who thinks a yield curve is a skateboard trick and risk management is a protein powder flavor. We're gonna fix him. Let's get busy. Here's what happened today that actually matters. $690 million in institutional buying hit this market in one news cycle. BlackRock bought $230 million through IBIT. Saylor added $78 million in Bitcoin. Tom Lee's BitMine dropped $82 million on Ethereum. Binance parked $300 million into its reserve fund. $690 million from the biggest garages on the planet, and Bitcoin still slipped under 70,000 today. Ethereum sitting just above 2,000, Solana at 85. The smartest money in the world is buying, and price is still sliding. Either settlement lag is building a floor you can't see yet, or there's a forced seller bigger than all of them still dumping into every bid. We find out this week. Now let me explain why this week matters more than any headline you've read this year. This is bond auction week. And I know bonds sound boring, but this is the engine that drives everything, so buckle up. The United States government spends more than it earns. To cover the gap, the Treasury sells bonds, basically IOUs. This week, they need to sell $125 billion worth, 3-year on Tuesday, 10-year on Wednesday, 30-year on Thursday. When lots of buyers show up, interest rates stay calm, everything breathes. But when buyers don't show up, the government has to sweeten the deal, raise the interest rate. That's called a tail. And when government interest rates go up, it reprices everything. Mortgages, car loans, stocks, and yes, your bags. Because if you can get 4.3% risk-free, why take a flyer on something volatile? Money leaves risk and parks in safety. There used to be a shock absorber called the reverse repo facility. Think of it like a cash cushion. That cushion is gone, empty. China just ordered its banks to reduce US Treasury holdings. Japan, the other massive buyer, just elected a prime minister who wants to spend at home. Wednesday is the danger day. Jobs report at 8:30 a.m., 10-year auction at 1 p.m. If that auction tails, everything gets repriced. Friday is the verdict, CPI at 8:30 a.m. If inflation comes in hot, rate cuts are dead. If it comes in soft, shorts get squeezed. Lulu is running the full technical breakdown tomorrow in the garage. Levels, magnets, traps, all of it heading into Wednesday. Don't miss that one. Now let me explain something most people have never heard of that could move this entire market, a CTA, Commodity Trading Advisor. These are giant funds that trade on autopilot. Code, rules, math, no emotion, no hesitation. When markets trend up, the code buys. Goldman mapped their trigger levels. If the S&P holds, they buy 15.6 billion. If it slides, they sell 33 billion. And if the S&P drops below 6707, it's not a dip, it's a trapdoor, 80 billion in forced selling, automatic. Now, crypto, Ethereum is the most dangerous asset in the complex this week. Open interest jumped over 6% in 24 hours. That's the oldest trap in the book. Leverage stacks, price stalls, and it liquidates the crowded side. Ethereum is the skinny tire that hydroplanes first. Solana, 85, looks stable on the surface. It's not. Stablecoins on Solana dropped 376 million in one day. And the Solana trenches, we scanned 49 trending tokens, one passed clean title rules. That's not a market, that's a chop shop with better branding. XRP, let's talk about it, $2.2 billion in whale accumulation between $1.11 and $1.45. That's institutional conviction. But here's the truth, this is a binary trade. The entire thesis depends on one thing, Japan's SBI launching Ripple's payment infrastructure this quarter. Now the AI wars, because this matters more than people think. OpenAI launched GPT 5.3 Codex on the same day Anthropic dropped Claude Opus 4.6. These aren't chatbots anymore. Codex scored 57% on professional software engineering benchmarks. OpenAI says it helped build itself. The AI arms race is the single biggest driver of capital expenditure. Amazon is spending $200 billion. Microsoft just signed a 5-gigawatt nuclear deal. That spending is why energy stocks are up 14% while software is down 30%. The market figured out that AI needs power plants, not just code. Gold is above 5,000, Bitcoin can't hold 70,000. Digital gold is dead until Bitcoin proves otherwise. So here's the read. The bond market is the steering wheel. Wednesday is the danger day. Friday is the verdict. Everything between now and then is the market asking whether the plumbing can handle the pressure. If this helps you understand what's actually driving this market, smash the like, hit the follow. Share this with someone who's staring at candles while the bond market is steering. Drop your top coin in the comments. No financial advice, just the garage, engines hot, safety off, let it rip.